So good afternoon, everybody. Adam DeFrancesco here, and this week we're kind of doing Am I Exposed, a look at insurance. And I have to say that, you know, with everything that's going on in the world these days, making sure that you actually have appropriate coverage, it can't be more crucial. You want to make sure that if something, kind of went wrong. I mean, insurance is that's what it is. It's insurance. It's meant to be not when things go right. It's meant to be the, what happens when something goes wrong. And we're very fortunate that we've got a great group of panelists today to kind of talk to us about the insurance. One thing that I've learned really quickly is that there's not just one type of insurance. There are dozens of types of insurance. So I'm going to kind of introduce them and let them tell you a little bit about the insurances that they specifically covered, and then we're going to hop right into it. So our first panelist is Laurie Feltmann. Laurie, are you here?
I am here. Hello, everybody. I'm Laurie Feltmann. I have been here with Hudson United for about 4 years now, but working in insurance for over 20 years. I focus on personal lines, your auto insurance, home insurance, umbrella insurance, boat insurance, any kind of insurance you need for your personal like belongings. That's what I specifically focus on.
All right, awesome. And then we also have Barkin. Barry, are you here?
I am here. Hello. I focus on personal lines insurance, your homes, your autos, cars, boats, kind of like Laurie. I also dabble in some commercial insurance too. So I do have that. I've been with the company about 8.5 years, and I've been in insurance just about 18.
All right, awesome. And then we have Alan Ricky Maddox. Ricky Bobby, Alan Ricky. Ricky, you here?
I'm here. I have about 47 names, but I'm here and happy to be here. I've been working at Hudson United for going on 3 years exactly. Been in insurance for 14 years. Just like the others, I focus on home, auto, flood, boats, all the personal stuff. I have been doing life insurance for that whole 14 years. So that's one of the things I've been doing, and also been doing commercial insurance here at Hudson United.
All right. And then our fourth panelist is Sheila Chesterman. Sheila, are you here?
I'm here. Hello, everyone. I've been with the company about 6 years, in insurance for 13, and I do everything that everybody else just said, except with the addition of health, dental, and vision, and AFLAC. So it's all the personal lines policies, all the health policies, life, AFLAC, dental, health, vision, for the company and for outside of the company as a 1099, not as an employee, but as a 1099.
Let me start off with my question that, I always want to know, which is that kind of what's been going on in the insurance agency. And Sheila, I guess, you've got the widest scope. So let me start with you. We've heard of everything that's been going on the last 90 days. Half the country's been shut down. People are worrying about COVID. I mean, is insurance okay? Are we up? Are we down? Are people doing business? What's going on in insurance?
Good question. So Hudson United is doing very well. We are up, fully functional, and we've been able to really continue working through all of it, which has been great. A lot of the insurance companies, as you know, have given people credits for being at home on their home and auto policies. Health insurance companies have done the same. They're sensitive to the fact that people aren't working or have reduced salaries. So the companies are doing things to help people get through it. As far as your coverage, none of your coverage will change through this. Everything will stay in place. You don't lose any coverage by having a credit back from the company. And basically, we're here for anything. There's still a lot of deals are closing. We're here to take care of all of that, and any of the other, a lot of mortgagee changes because people are refinancing. We get those every day. So we're really here, fully functional and able to get the job done, which has been great.
All right. Well, I'm glad to hear that, those things are going well. And, one thing that I'm aware of, because not only as a host, I'm a Hudson United client. You guys have written multiple of my policies. You guys have always been on the forefront of digital signatures and e-transactions. Barry, could you tell me a little bit about, have you seen any difference from the end users, from our clients, with regards to it, or has it pretty much been status quo with them doing e-transactions because it's just been the way that we've been doing it in Hudson United for a long time, that everything's been electronic?
Everything's been the same. I mean, we've been using electronic signatures since before we got Dot Loop into the company. We've always done everything over the phone. We've always gotten information through email or, or vocally. So for us, really, nothing has changed. It's just been, just sitting at home working instead of being in an office, really, for me, is what's changed.
All right. And then, one of the other things that we've all been talking a lot about is, again, so you're saying a lot of it's on the phone. Have you, and I'll throw this out to Ricky. Ricky, I mean, are you still doing as much on the phone, or are you seeing that you're doing even Zoom calls now like everyone else? How are you seeing that the consumers are looking to interact?
I have not done the Zoom calls with customers, only with colleagues like this. It seems like in this aspect, because the customers have already gone through so much with the real estate transaction, this is almost like an afterthought. Let's just get it done as quick as possible, that they just do it on the phone. And as we talk on the phone with them, we just try to control the conversation with them as well as listen. But I'm not sure if any of you would say different, but I haven't done any Zoom calls really with them, because I think they might be zoomed out, or they're just zoned out by the time they get to me. So they want to get it done. And the underwriting starts after the closing anyway for us. So ours is a little more quick and painless compared to the other procedures in the real estate transaction.
Laurie, what about you? I mean, do you see the same thing that Ricky does with the way that the clients are working with you?
I do. I don't do any Zoom calls. Nobody ever requests that. I think, people in general don't typically meet their insurance agent face to face. Typically, a lot of it has been phone transactions over the years, and that's what they're used to and happy with. And Ricky's right. A lot of the underwriting doesn't start until after the closing. So in the beginning stages, our sale is a lot quicker. It's a lot quicker than, buying a house or, the other processes.
All right, Laurie, you just brought up a really good word for me, though, and that's always been interesting. So, we hear the word agent, we associate it with broker. What are we? We're not, is Hudson United an insurance company, or are we an insurance broker?
We're an insurance broker. We're an agency. So we're an independent agent, and we work with different insurance companies. We contract with insurance companies to write their insurance and represent them. So the good news is, and the benefit of it is, we represent the client, so the buyer, and also the company. So we're that middle person that supports both. We want to give the company the business that they're looking for, but we also want to, do the right thing by the clients. And we're that confidant to the client too, where they can call us. I always tell my clients, if you have a claim, auto or home, you think you have a claim, call me first. Let's discuss it before we get the insurance company involved. And that's really important. Because when you work directly with a Geico and you call them and I had a fender bender, that's a claim, regardless of whether or not they ever pay out any money at all. Or I had a pipe burst in my house and now it turns out it was only $1,000 worth of damage, so you're not going to put the claim in. It's still a claim that counts against them. So it's nice to have that independent person in between that can guide you and give you advice that's not going to affect your premiums at the end of the day.
Sheila, I see you nodding your head, and being that you kind of have the largest scope, because again, we're putting on the dental, some of the other health benefits, the Aflac thing. I mean, does that kind of go across the board of having? Because I mean, Aflac's a very specific product. So how does that brokerage relationship work, kind of all around, how do you see it?
Okay. Yes, I agree with everything Laurie said. On the health side and also on life, it's the same thing. We are a broker. We represent multiple companies. We gather people's information and then quote it out, work with the companies to get them the best coverage with the lowest premium. Aflac is just one product that we offer in our portfolio for supplemental insurance. So the same functions that Laurie just described is the same thing that I would do for life, and Ricky, I would do for health, and Ricky and I would do for health, for life, sorry.
No, that's okay. Let me kind of tie this back to where I was going. you know, some people don't know what Affleck is. I mean, I know it's the cute little duck that comes around my screen and goes, Affleck. You know, I mean, that's really my fullest extent of what Affleck is. Don't laugh at my impressions, Barry. But what actually is Affleck? Are there other carriers that provide the same type of services that Affleck does? And is it more important now with, you know, what's going on with COVID-19 that should I have Affleck? Should I not? I mean, I know I need to have certain things, but I mean, what is it?
Good question. And most people are confused about what Aflac is. First of all, yes, there are other companies. Aflac does have competition, but they are the premier company in supplemental benefits. And the purpose of an Aflac plan is to give you money directly if you become sick or injured to pay your bills. It's not health insurance. You are paid on being treated. So for example, if you had, let's say you broke your leg, and you had to go to the emergency room, x-ray, MRI, physical therapy, all of those treatments trigger a benefit with a dollar amount that comes directly to you. You then use that money however you want to use it. You could use it to pay unreimbursed medical, or you could use it to buy groceries or pay your mortgage. So it really is a plan that supplements your health insurance, but its whole function is to give you extra money when you may need it the most. And now with the situation that we're in with COVID, it really is an important policy to have because again, it's giving you back up to your income.
So, you know, I just, you know, my wife over there just kind of like threw something at me and it was kind of like, oh, we have Affleck. You should have known that. I'm like, oh, I didn't know that. So if I have an Affleck plan, should I reach out to you though and make sure that I've got the right Affleck plan? I mean, is it good for you to be able to review what's there? I mean, if I already had a policy in place?
It's good to see to make sure that you have all of the different policies that are available. Once you have a policy with them, one of the great things with Aflac is that you never have a rate increase. So it's not anything that you would want to, say, competitively shop. When you enroll, whatever rate you have, you will keep the entire time that you have the policy. So the only real benefit would be to say, oh, do I not have the accident plan or do I not have the cancer plan or whichever. But what I do see happens a lot with Aflac policies is people tend to forget that they have it and they don't put in claims. So put in your claims and they all have on the cancer plan, there's a wellness screening benefit. And no matter how long you let it go and don't put it in, they will honor it. I worked with a woman who didn't put it in for 10 years and they sent her $750. They honored all of the parts of their benefits and especially the wellness claim. So that seems to be the main thing. People forget they even have it.
All right, well, a question came up in the chat, which is that is Affleck a monthly or an annual premium?
If you're getting it through payroll as a manager in the company, it would be a bi-weekly payroll deduction. If you are getting it independently as a 1099, you can either pay monthly, quarterly, or annually.
All right. Now, while we were in that, you were talking a little bit about, you know, that it's a supplement, which I get that. So Affleck is not life insurance, correct?
No, they have a life insurance product, but it is not life insurance per se.
All right. Well, Ricky, you sell life insurance. I mean, it's one of the services that that you provide. What's different with life insurance in 2020 that I may have not known about?
So the difference now is that most of the differences are on the purchase, because once you buy life insurance, it is what it is. You could have bought it whenever you bought it and nothing really changes with it unless you have a life insurance that's tied into the stock market, of which we don't offer. But if you bought it before, it is what it is. And also you might have had one that is indexed and it's increasing over time. Sometimes they have ones that part or most of the premium goes into an account that grows about 5% interest. Almost like an escrow account is part of the mortgage. These life insurance plans have the indexed accounts that are growing 5% over time. But that's no here nor there, but they do serve as savings. The other thing that has changed is, well, really it's stayed the same, that the life insurance industry has not budged on is if you're buying a larger amount of life insurance, let's say 200,000 or more, I say larger, but if you buy life insurance 200,000 or more, they are still requiring in some cases, and Sheila, get me on this if I say anything that's not right. They are still requiring in-person medical exams, if you're scared of coronavirus or not. So you still got to get it, the medical exams. You can postpone it, or you can come to us and give a down payment and put life insurance in effect today. But in order for it to really be approved for longer than 60 days, you do have to get an in-person medical exam. Most times it's a nurse coming to your house. So you don't know where that nurse was. You don't, right now there's no coronavirus questionnaires like we have when we go into the real estate offices. They're coming and asking you if you want to do the medical check or not. But when they come in person, that's the thing that has not changed, is that in spite of coronavirus, people are still coming into your home for life insurance to test your height, your weight, your blood pressure, your blood sugar. Whereas in Barry will talk about the home insurance, the interior inspections for home insurance have kind of stopped, but not for life insurance.
Let me kind of follow up with then, are there things that have changed? So if I am now, let's say I am, a nurse, or I am in a household that, has a nurse in it, the probabilities of me potentially having something else that would impact my life could be greater or less now due to, the coronavirus.
Right.
Is that been looked at? Is that starting to have impact on rates? Because I am, I've had enough of hosting. I don't want to host anymore. And I'm going to go be an orderly at the hospital. So I now have a new job. Like if I went to go get health insurance now with this new job in what would be a higher risk, would my rates be higher, or are they really looking at the person and their health and their well-being on how they make those type of decisions?
As it stands right now with life insurance, the only high-risk people are professional skydivers or stunt drivers, or if you are flying airplanes or you're a race car driver, something like that. They haven't caught up to coronavirus things as far as if you're in the medical profession or if you're doing this or doing that around a lot of people right now in COVID. They have not caught up. It's had an impact probably on claims, but they have not gotten around to changing the application yet. Sheila, what would you say?
Yeah, that's right. There are certain things that are considered dangerous activities, skydiving, like Ricky said, where they can exclude and will not want to write you. They put you in a different category. On health insurance, though, there's really no exclusion. You cannot discriminate against someone because they are a skydiver or they have a pre-existing condition. For 9 out of 10 of the policies that we offer, there is one company, though, that is designed specifically for 1099s and small business owners, where you can enroll at any time and they will not discriminate against that type of thing. So, there's always, if you have a question like what Adam just said, it's always worth a phone call to say, hey, is there an exclusion for this? Is there a difference with this? Would this make a difference in my policies? It's always good to ask because things are changing with everything that's going on.
All right. Well, I want to talk about happier things because to me, and I really wasn't kidding when I said, not only am I the host, I am also a client. Sheila found me a wonderful life insurance policy a little more than a year and a half ago. And, hopefully I will never need it, but it's good to know it's there. It's insurance. That's the whole point. But let's talk about some of the more common insurances that, for those, because, life insurance, it's a gamble, right? Like that's the whole point. The point is that you're gambling against the house and you're hoping that you're going to beat the house. But let's talk about the other ones where, again, almost you do need them. Which is really home and auto, because, most transactions when you are buying something, you do, if you've got a mortgage, you're going to need home insurance. And if you're going to put your key in the car, you're going to need auto. So Barry, let me talk to you a little bit about home and auto insurance. What have you seen? I know that earlier, and I forget which person on the panel mentioned it, but, we were talking about some of the vendors offering, some credit back because we were all staying at home. Talk to me a little bit what's going on in home and auto right now.
Well, it's the same thing. Most of our carriers have already given the credit, so it is out there. I know Progressive offers it. I think there might be one insurance company that we have that didn't offer it, and I think it's the one I have. So, but that's the way it is. But for the insurance companies, I mean, nothing's really, like I said, with the COVID, nothing's really changed. But checking everything every so often is always good for you. Always making sure you're getting the best coverages, the best rates. Things change. People put in a pool. People get a new roof put on the house. All these things affect the premiums. And the same thing with the auto insurance. You got to look at the coverages there. You want to be well covered, especially like for agents that are out there driving more than someone like myself who's sitting here in front of a computer working. Your liability risks are a lot higher than mine. But you should have the proper liability limits. God forbid something does happen out on the road.
You kind of mentioned liability risks, and to be honest, I know that if something happens, I know I've got a deductible. I know that's how much I have to pay. What is a liability risk?
Well, could be anything. Somebody come on your property. If you have a swimming pool, someone get in the pool and they accidentally get hurt. Somebody walking across your sidewalk trips on a crack on the sidewalk. Plus the liability follows you. Someone who plays a golf game like me could swerve off a golf ball and hit somebody and they sue me. So, anything like that is a liability claim.
Let me ask you another question. Again, it's one of those things, and there was just a great testimonial in the chat. I'll read it in a second. I've got my own story. But I recently was reviewing my own policy. And one of the questions I came up with, there was a line that said market value and replacement value. And they weren't the same number.
We run into that too. I get people like, market values are so different. I just take Orange County. A market value is different between Monroe, Goshen, Greenwood Lake. So I always tell people, just because you have a 2,000 square foot buy level, you may be able to sell that buy level in Monroe for $400,000, but in Greenwood Lake for $275,000. But the replacement value of that structure is still the same, no matter what the market value is. So like my house years ago, I paid $140,000 for my house. I'm now, my market value on this house is about $200,000. But I'm still covered for $300,000 because that's what it would cost to rebuild the house.
All right. Well, that makes sense. And it really does, because yes, the fact is that the market value is highly dependent, and real estate professionals are very aware of that. Based on one block away from each other, in a different school district, you can have, a 20 or 30% difference in value, but to actually rebuild the structure, right, would make sense. So that actually makes a lot of sense. What I'd like to do is, JP, if you wouldn't mind unmuting yourself, that was something that was really interesting. We've got one of our listeners here who is also a client of Hudson United who just wanted to share something. So JP, are you here?
I am. I actually have two stories for you. So
all right, well, I have time for one.
Okay. Well, I'm going to make them 5-second stories. Sheila quoted my home and car insurance and got me better coverage with a lower deductible and saved me $700 a year, which is outrageously amazing. And then she quoted my husband's, the second story, she quoted my husband's rental property and saved him almost $3,000 a year because his company really didn't want to be in the rental business, and it was like $5,000 and she got it down to like $3,000. It was amazing.
That is amazing.
And better coverage, and better coverage. And the thing is, I don't really know a lot about coverages and what you should have in umbrella policies and all that. And so to have somebody who really explains it is terrific, and to tell you what you need, because the truth is we deal with clients, sometimes they get in our cars and you've got to have the best coverage that you can. And Sheila made sure that I'm, covered. Hudson made sure that I'm covered fabulously.
Well, that's an amazing story. And I would love to sit there and say it's a unique story, but it actually is a very, it's a story that I hear fluently to myself, where, again, like I said, Sheila's got my life insurance. Barry wrote my homeowner's policy. And while I was home over the last 90 days, one of the things that we wanted to do was reevaluate the policy. I reached out to Barry and I said, Barry, do me a favor, check the premiums, make sure, because again, Hudson United is a mortgage brokerage, which gave us 15 different partners to go look at. Make sure that I still have the best that's out there. And they came back to me and they said, yep, we currently have the best that's out there. Well, wouldn't it be my due diligence if I didn't go and cross-reference one of the carriers that we don't? And I did. And I will tell you that I called Geico. It was a public carrier. And Geico came back. Their premium was $5 more a year, which was comparable. I mean, $5 is $5, but they were 30% less in coverage. I had over $100,000 less coverage in dwelling and over $200,000 less coverage in personal property. So that tells me that, I went from having $600,000 in coverage with Geico to almost $1 million in coverage with the company that Hudson United found for me. So it's a consistent story. And it's great when we have those stories. It makes it easy for me to relate because I just did it. And literally, I just did it 3 weeks ago. So I do get a lot of.
And you know what else too? It's also AFLAC if you need that coverage for work if you're worried about it. There's also those options, which to explain and navigate that is also tough to do if you don't have the knowledge. So thank you, Hudson.
And I will tell you, the chat room is just completely lit up with people telling me private stories of other things. And guys, I would really love to jump into every single person's success story. And at some point, who knows, maybe we'll get you all on a Zoom call and we'll let you all cut testimonials for Hudson United. We know how great they are, but it's great when you guys are able to share that as well. And you guys have completely flooded the chat room with information, which kind of leads me into floods. All I know is that at least every other month, I am reading office notes or I am reading an email and they bring up the 5-letter F word, flood. And it is the hottest topic for something that I live on a mountain. I'm not worried about flood insurance, but we happen to have great flood insurance here. So Laurie, are we selling flood insurance policies?
We are. We're selling flood insurance policies. And we have options. Years ago, you didn't have any options. It was a federal flood program. That was it. The premium was what it was. Premium was the same regardless of where you went. But now there's a lot of private flood carriers out there. And we represent about 3 or 4 of them. So we can actually, price shop the flood rates in certain situations. And the truth of the matter is 25% of flood claims are in non-hazardous zones. So the truth is we should all probably be carrying flood insurance. If a water main breaks, that's a flood. If you get water in your house. So everybody should look into it.
All right, so let me do this because I will tell you that over the span of my career, I have heard multiple office meetings and I've had multiple calls about flood insurance. So I've got a list of one-off flood insurance questions. First one, I am currently representing, I've got a buyer client who is buying a property. The property already has a flood insurance policy on it. Is a flood insurance policy transferable or do they have to buy their own policy?
If it's a federal flood policy, it's transferable. They can assume the owner's policy.
All right. So, but the federal policy, so that would be something that was written a while ago, and then that premium is being paid to the government. Is that the idea?
Well, it's being paid to the insurance company. There's flood administrators that it's the federal flood program there, but it's the flood administrator, so they're paying it to the insurance company. But the idea is if someone's in that, the only reason you would assume a owner's flood policy is if they were grandfathered in for some reason. So their premium was less because they got it 30 years ago when the house was not in a hazardous flood zone, and now it is. So I always tell my clients, send me over what you have, get a copy of the seller's policy, send it to me, and I'll let you know what the best way to go is.
Right.
Who makes the determination of whether or not I need flood insurance? It's my house. Why can't I make the choice?
The mortgage company.
It's the mortgage company?
The mortgage company determines whether or not you have to have flood insurance.
So Is it all mortgage? I mean, is it possible that if I went with company A that they would require it and company B would say no?
When that happens is there's lots of properties where part of the property is in a hazardous flood zone, but the structure itself is not. In those situations, some banks may require flood insurance, other banks may not. So my advice always there is to go to a mortgage broker, go to Hudson Mortgage. They represent a lot of banks, and find a bank that will not require flood insurance.
Is it safe to say that if the current sellers of a property don't require flood insurance, that I'm not going to need it?
No, not safe to say at all, because the flood zones changed. So here in Bergen County, they just changed in August of last year, August 2019, the flood zones changed. So a lot of people who have been in their house for 30 years have no idea they're in a hazardous flood zone. They don't know, because if they don't have a mortgage, nobody's telling them that they're in a hazardous flood zone. The town gets notified, the town maybe puts it on their website, but I've had a lot where the people have no idea they're in a hazardous flood zone.
All right, this one happened to me years ago, and I was dealing with a property, and a corner of the property was in a flood zone, not where the actual building was, but the flood zone did cut through the lot. So is it possible to have a property removed from a flood zone?
It's possible. You have to go through the federal government. It's called a letter of map amendment. And it's costly. It's probably about $1,000 all in all. But yes, there is a process that you can go through to try to get the house removed from the federal flood, from the hazardous flood zone. And I have seen actually several buyers be successful in doing that. You know, several. I'm surprised how many are actually successful.
Is flood insurance like title insurance, where it's kind of a set rate, or are there variables? And what type of variables would impact my rates?
Well, again, if it's a federal flood policy, it's a set rate. It's going to be the same whether whoever's buying the house and whoever, you know, whatever agency you go to, insurance agency. On the private, it can vary. I mean, the private, you know, I've had a private where it's one company might be 2,000, another could be 900. And it's really based on, you know, it's a good question. I mean, it depends on the zone you're in, and it depends on how the house is elevated. That's another thing. You might want to get an elevation certificate to see if your house is elevated above base flood. So there's a lot involved in it. I would always recommend, if you need flood insurance, to talk to somebody who can really walk you through it, and don't just assume you have to take that federal flood rate that somebody's giving you, because there are other options out there.
All right, so you threw those numbers out, 900 and 2. I mean, is that per month? Is that annual?
No, so yearly. I would say yearly. I don't know, Sheila, whomever else, Ricky, Barry. I would say the federal flood is typically between $3,500 and $4,500 a year, and private can vary. I mean, yeah. Sometimes you're shocked. You're like, wow, it's only $900, $600. That's great. So it's definitely worth having buyers look into it.
All right. So the last question I want to ask about flood insurance, because I've now flooded you with a bunch of questions on it, is I don't live in a flood zone. All right. Although you did say that, like, yeah, water backup, but I don't live in a flood zone. Can I get flood insurance?
Yes. It's relatively inexpensive. I mean, if you're not in a hazardous flood zone, you can get it for $500 a year, or even less than that with lower coverage. You know, you can reduce the coverages, and that will be less.
All right.
Sorry, Laurie, also too, just to add on to that, only if your community is participating in the FEMA program. Not all communities do participate, because they've proven to FEMA that they've done what it takes to reduce the risk of flood in their areas.
Well, that's good to know. Let me talk about some other insurances. I mean, Laurie, is there anything else before we jump off of floods? Is there anything else you want to tell me about flood insurance?
I think we've covered it all. Okay.
All right. If anyone has any questions, that's Laurie Feltmann, Feltmann. She can answer all of your flood insurance questions, as well as everyone else who's on the team. But Laurie and I just happen to be enjoying a little bit of a joke about it. You know, I would tell you that especially coming out of COVID, that we're going to see a lot of people who don't know what's going on in the housing market. And because of that, we're going to see a lot of renters. It's one of the things that has been brought up a lot, that there's talking about an exodus coming out of the city, moving upstate. And in that period of time, there may be a lot of people who are renting while they're trying to figure things out. Barry, do we do rental insurance?
We certainly do. We offer every kind of insurance. Rental insurance is very important. I just did a CE class on rental insurance, so I think I know too much about it now. But when you move into somebody's house or into an apartment, everything you bring into is your own responsibility. So if there's a fire there, you can't go to the landlord and say, "Hey, I lost everything. That's your fault." No, you got to get your own. Plus liability too. If somebody comes in the property or even on the property, and they trip and get hurt, they could turn around and sue you also, even being the tenant. So you want to make sure that you have your liability insurance. And most of the times inside the unit, it's going to come to you before it goes to the owners.
All right. So therefore, anyone I know who's renting definitely should be kind of reaching out. What about on the other side of it? What about the landlords? I mean, I'm assuming that's a different type of insurance.
Yes, the landlord needs what's called, in our terms, called a dwelling fire policy, but it's a landlord policy. It's a lot different than a homeowner policy. It gives you premise liability. It covers the structure. So it is a lot different than being an owner. And it usually costs a few more dollars more than a homeowner's, but it is the proper. But it does protect the landlord and his belongings.
All right. Ricky, let me ask you though, but if this is landlord, would this work for my commercial spaces as well that I have?
What are you asking, Adam?
Barry was talking about, so I've got tenant and I've got landlord, but I've also got my commercial tenant. I'm a commercial landlord. How does that work with regards to the commercial industry?
Yeah, so the way that goes is that people can get a lesser's risk that could cover them for the liability. It's funny. As soon as I unmute, my kids, they all fall down the stairs with all their toys. But yes, that's correct. It works the same way, similar to with a lesser's risk.
All right. Barry, let me kind of go back to you for a second while Ricky's dealing with his kids. You mentioned earlier, with regards to agents having people in their car. Should I have a different type of policy? I mean, what do you need to know that I'm driving people around? I'm not Uber.
No. But the first thing is you got to make sure you have the right liability limits. And also your car has to be listed as business use because you are using it for business. They're one of the few businesses that you can actually put on a personal policy. So whenever I talk to an agent, I know automatically it's getting put under business use, and they're automatically getting at least $500,000 per accident on the liability, unless they want more. I would never recommend less than that. You expose yourself too much out there. I even talk about liability umbrella policies, which goes over your house and your autos and any of your rental properties. And what that is, it's just additional liability. God forbid you exhausted the limits of your primary, it's additional. And $1 million, depending on the company, could cost you anywhere from $150 to $250 a year to have that additional liability. Well worth it for everyone to have it. And I know me as myself, any client I speak to that I quote a package out, they're automatically getting an umbrella quote.
Let me ask Ricky back with commercial, because that's one of those things that I always thought, well, I've got an umbrella policy, but as a real estate professional, am I exposed by not having a business insurance, or is my umbrella policy good enough in case something goes wrong?
It's all about who's named in the lawsuit, and I'm going to invite all my colleagues to chime in on this because now we're getting in important terms here, including I see you, Nancy. But all of you can chime in on this. What I'm going to say is it's about who can be named in the lawsuit. So if you are Jane Doe Realtor, if you have your own personal liability insurance on your home, maybe hopefully that would cover you. But if you have Jane Doe Realtor LLC, if that LLC can be named in a lawsuit, it's in your best interest to cover the LLC in a commercial insurance policy. How much do these policies cost? I would say maybe they cost $500 for the year for $1 million to $2 million of coverage. So it's a no-brainer, and it's definitely worth it. The best money you can spend. You never know what can happen, say at an open house. I don't sell houses, so I'm not trying to pretend like I know, but you never know what can happen with the clients. And Barry, we're talking about keeping the clients out of your car, and you never know where there's some of the customers might be scam artists. You know, a customer wants to deal with you, but they may also maybe sue happy. So that's a good way just to cover yourself all around for $500 a year. For $2 million or $1 million of liability coverage is definitely something that might be worth it. Anybody else?
Well, you talk about not knowing what can happen, and I almost want to bring this up. We've seen, unfortunately, on TV over the last couple of weeks that we don't know what can happen, and there's a lot of things that are going out there. When we're looking at things like commercial insurance, we as real estate professionals, that's one type of commercial insurance. What about like other things that would be impacting commercial insurance, like in some of the hot zones, like in Michigan and in California, where there were, unfortunate incidences of looting and rioting? I mean, does the commercial insurance get impacted by those type of incidences, and does it have a trickle-out effect to myself as a local LLC, practitioner?
Yeah, so a couple things. The more police reports that are generated in an area and the more insurance claims that are generated in an area make rates go up. Now, the looting and so forth of a business, that is covered, breaking and enterings, what they're stealing, stuff like that. That stuff is covered under commercial insurance, so that most times would be a covered claim. But the unfortunate thing about it is the rates go up after the fact because of the increase in police reports and the increase in insurance claims.
All right. Well, that's a bummer. I mean, unfortunately, but I mean, it's something that we need to be aware of. But it's interesting to know. All right. So I just kind of want to go back to that, and then because we've got about 10 minutes left. If there's questions, guys, please put them in the chat room. I've got one more question for Ricky about commercial, and Sheila, I've got some questions about some of the other health things that we have. We were just saying, so there is a direct correlation on rates. You were saying, Ricky, just based off police reports?
Yes, definitely. With that too, and I would say, Barry, you could say this too, with car insurance as well. Would you say that too, Barry, in a certain area?
Oh, yeah, for sure. You notice certain, like I wrote a lot of auto insurance in Jersey, and I can always tell you there's different counties that have much higher rating because of loss ratios than other counties. So.
Well,
Sure.
that's good to know. I mean, it's one of those things when people are looking to control their budget, to understand that those are external factors that really do have some control over it. And with that, I almost want to go into just the other external factors that we don't have control over, which is, we've got some control over our health. Sheila, with regards to the health premiums and the health policies that are available, what do we have available? It was one of the things as a 1099 real estate professional that, the worst thing in the world was that you would never have coverage. I mean, that was it was an understatement. It was save as much money as you can, and because you don't have coverage. But that's not the case anymore, is it?
Well, let's take it from the two states. We have New York and New Jersey. In relation to COVID, both states had a special open enrollment period, letting people get insurance where they haven't had it. At this time of year, that would never be. You would normally have to wait until open enrollment. New Jersey ended theirs June 15th. New York extended theirs until July 15th. So anyone that needs insurance that doesn't have it in New York, absolutely we should talk. There's two ways to go. You can go through the exchange, which I'm appointed with, or directly with the insurance company. You only go through the exchange if you're going to get a subsidy to help you pay your premium. If not, then we go directly to the insurance company. In New Jersey, you're going to have to wait until open enrollment unless you have a qualifying life event. You're new to the area, loss of job, marriage, divorce, birth of a child. You'll have to wait until open enrollment. If you don't have any of those and that would start November 1st. There is another type, which I mentioned earlier, which is available to 1099s and small business owners. It gives you access to national plans. There's no open enrollment restriction. You can enroll at any time. And again, if anyone is interested in more details on that, just get in touch with me. So those are the two different ways of enrolling at this point in between the two states.
All right, and that's, I guess, important to know, right, that there would be a difference in some of these enrollment dates between the two states. And you know what, that's gonna kind of tie my last question here. And Barry, I'm gonna throw this one to you. I live in New York. I work in New Jersey. How do I do? Does my car insurance have any impact on that, or?
You know what? It's all based on the mileage you drive per day. The question that we ask when somebody comes to us, how many miles do you drive to work each day? So if you're driving 10 miles, it'll have a bigger effect if you're driving 50 miles each way. So it's based off of that. They don't really ask me where they're going. It just asks me how many miles they're going.
Well, as of right now, Barry, my mileage is 0. So how is that? If that becomes my new norm, without kidding, how potentially could that impact my personal driver's insurance and maybe even the industry as a whole?
Well, a lot of people that used to drive to work can now probably change their vehicles over to pleasure use, which will save you some money. I know just recently I'm getting about 3.5 weeks to the gallon on my car, so it's been really good. But yeah, you change it over to pleasure use if you're not driving back and forth to work.
Well, that sounds like a great idea, and I think this entire call has been a case of pleasure use. So with that, I do want to take the opportunity to thank all of our panelists today. I'm going to let them say goodbye as well, but I do want to thank all of our panelists. It has been a pleasure having you guys all on today, and there was a lot of information that was brought out there. And if there are any questions, always feel free to reach out to any of our insurance reps. They are always available to you guys. And if there's anyone who wants to leave a testimonial, please let me know that in the chat. We'll be more than happy to after we stop going live, we'll go from there. So with that, guys, again, my name is Adam DeFrancisco. It's been a pleasure. Laurie Feltmann, Sheila Chesterman, Ricky Maddox, Barry Barkin, and the rest of the Hudson United Insurance team. We thank you guys. Have a great weekend and stay safe, wash your hands, and we'll see you next week.